By the end of next year, I mean, I think I would guess over 150,000 per coin. I mean, there are scenarios that go much higher than that because it tends to be a pretty explosive space when momentum builds. So I wouldn't try to predict a top. It's more like what I would consider healthy or realistic, which is another 20% increase over the course of next year, if not more. So I'm glad to see it happen. Or would silver be kind of flirting with $50 an ounce? I'd be like, it's good for my portfolio if it does, but I wouldn't bet that it will. So I think
Yeah.
precious metals surprised the upside, whereas Bitcoin's kind of muddling along, even though it has nominally touched new highs.
Bitcoin's sharp drop from $122,600 to $107,000 has reignited debate over how and how fast major institutions will embrace the world's leading digital asset. Lyn Alden, a leading macroeconomic analyst and investor, has offered fresh insight into the evolving landscape of Bitcoin adoption as the asset faces heightened volatility. Bitcoin recently dipped to a day low of $107,000 after reaching a high of $122,600, reflecting the market's current sensitivity to macro and institutional positioning. Alden points out a critical distinction between sovereign wealth funds and central banks in their approach to Bitcoin. Sovereign wealth funds, with their long-term investment horizons, can act more decisively, while central banks are slowed by bureaucracy and risk aversion. She highlights how early movers like MicroStrategy and Fidelity Investments capitalized on more centralized decision-making, unlike traditional institutions. Smaller nations such as El Salvador and Kingdom of Bhutan also illustrate how swift action can drive sovereign Bitcoin adoption. Alden emphasizes that Bitcoin functions not only as a reserve asset but also as a settlement system of last resort. While central banks may be slower to adopt until volatility eases, sovereign funds are expected to accumulate more aggressively. Meanwhile, total digital asset market capitalization slipped 0.6% to $4.3 trillion, with BNB outperforming peers and surpassing $1,200. If you found this analysis valuable, don't forget to like, share, and subscribe for more market insights. We're here to keep you informed with clear, data-driven perspectives on the forces shaping the future of crypto. Stay ahead of the curve and join a community of investors who don't just follow the market, they understand it.
I don't know about next year, but in the longer term, yeah. And so what I would separate is sovereign wealth funds from investment from central banks. So when you mention like some of them own MicroStrategy and stuff, that's generally in the sovereign wealth fund level. And there's a couple of reasons for that. One is central banks. I mean, the biggest underlying thing is that they don't move quickly. So most entities that we saw get into Bitcoin early have a pretty kind of centralized decision-making structure. So individuals and small businesses could get into it quickly because it only takes one or two key people saying, you know what, we want to own some Bitcoin now. Whereas a major corporation, like let's say Microsoft, there's a whole lot of people. There's no one just kind of unilaterally running the whole thing, even the CEO. There's a whole bunch of people that have to kind of be on board with something, and it takes a long time to build that consensus with something that was, historically contrarian. It's obviously very volatile. Part of why MicroStrategy could do it so decisively is because the founder, former CEO, now the chairman, he had a majority of control via dual class shares. So he had disproportionate weight compared to most CEOs. So you can almost run it in some ways like a small business. Not the same thing because it is publicly traded, but he had a lot of he could break through a lot of bureaucracy to make something like that happen. In a similar way, I mean, part of why Fidelity among major Wall Street, major traditional finance firms, Fidelity was really early into Bitcoin. They were mining it like 10 years ago, and they were hiring analysts to cover it, and then they got into custody. I mean, that's a private, as large as it is, it's a private business, and because the CEO was interested in it, they were able to move more decisively than many other peers, like BlackRock at the time or other kind of big things. Fidelity was early for that whole class of investors because it was more closely held. And central banks are kind of like more like that Microsoft example. These are big public institutions that are more about managing career risk and kind of not doing anything that seems unusual. So that's the kind of the fundamental thing. The second layer there is that when a central bank holds reserve assets assets, it's something that they want to be able to it's two main purposes. One is they want to be able to sell it at a time of stress to buy back their own currency to defend their currency. So generally speaking, they buy things that are less volatile than their own currency. So if you're an emerging market central bank, or if you're even a developed market central bank, you generally going to hold harder currencies, which generally includes gold, or in many cases the dollar, or in some cases the euro, or the pound sterling. You're going to buy a larger, kind of more solid currency or gold, and you want to sell them at time of stress, which generally means that you expect that asset not to have a big drawdown at the same time your own currency is having some sort of crisis or drawdown. And Bitcoin, being a younger, more volatile asset that is still tends to be correlated with risk-on environments, doesn't really meet a lot of their criteria for something that they want to be able to sell at a time of stress to backstop their own currency. So I think that will slow them down until Bitcoin is a larger and less volatile asset, more gold-like. And so it makes sense that there are smaller entities like El Salvador and others, that they have that more small business scenario where someone can make a key decision. Kingdom of Bhutan, El Salvador, they can be like, you know what, Kingdom of Bhutan's like, we're gonna use our spare hydro, we're gonna mine Bitcoin and hold it. And El Salvador is like, we're gonna buy some Bitcoin and hold it at the sovereign level. These are, and other central banks that have either holding MicroStrategy stock or holding Bitcoin ETFs, they don't have that requirement that they want to be able to sell it at a time of stress. Sovereign wealth funds are for longer term investment, so they can say we're buying this despite it's volatile because we expect 5-10 years from now it will have appreciated, and that's a different mandate than a central bank. And so I think that'll take time, and that generally speaking it'll be slower the larger and more traditional a central bank is. So I think it's somewhat rational that central banks don't hold it, even though I think it should be increasingly held by sovereign wealth funds. I just think they're generally slow the bigger that they are. The other thing that's interesting about Bitcoin is that it does, in addition to being a reserve asset, it's also a reserve settlement system. So if a country finds itself cut off from the dollar network and from other types of transactions, the interesting thing is that they're all trying to build these alternative systems, and those themselves are permissioned, whereas actually holding Bitcoin gives you a kind of a payment system of last resort in addition to a asset of last resort.
Bitcoin's surge past $125,000 last week has ignited a fresh wave of optimism, signaling what many see as the strongest institutional-driven bull phase since 2021. Lyn Alden, a prominent macroeconomic strategist, has highlighted a notable shift in Bitcoin's market behavior this year. Despite recently reclaiming key price levels, Bitcoin's momentum has felt more like consolidation than the explosive rallies of past bull cycles. After breaking $100,000 late last year, much of the speculative excess tied to corporate treasuries and altcoin hype has faded, leaving a firmer foundation for sustainable growth. In contrast, gold has delivered surprising strength, nearing $4,000, underscoring Bitcoin's comparatively muted short-term performance. Alden views this phase as a base-building period before another upward move, projecting a realistic Bitcoin price above $150,000 by the end of next year, with room for a stronger breakout if momentum builds. She also downplays concerns over the current network debate, emphasizing that it is a policy dispute, not a consensus threat. While Bitcoin Core and Knots differ on filtering non-monetary data like inscriptions, both agree on transaction validity, keeping the network secure. With Bitcoin surpassing $125,000 last week, analysts argue this rally feels different, rooted less in hype and more in institutional inflows, macro tailwinds, and increasing political support for digital assets. Let's get back to the interview.
Because it's slightly reclaiming highs reached earlier this year. And so it's not had good performance this year. I mean, it cracked 100K late last year. If you look at, say, just quantifiable metrics like, relative strength index, just various measures of kind of, technically overbought or oversold, gold's much more hotter in that case than Bitcoin. Part of what happened was basically all this past summer, a lot of the enthusiasm is in Bitcoin treasury companies and to some extent altcoin treasury companies. A lot of that bubble has been washed out, and it's now kind of back to a more solid foundation. So I think that space is likely to kind of build a base from here and kind of head higher. I'm obviously more focused on Bitcoin than the rest of the space, but things tend to follow to some extent. And so in compared to the performance that Bitcoin can do in a bull market, and especially a positive liquidity environment, I think its performance is pretty lackluster this year. Whereas gold has surprised a lot of people to the upside, even gold bulls like myself. If you were to ask me in the beginning of this year, is gold going to touch 4,000? I'd be like, well, I'd like it to. It might. I wouldn't. It wouldn't be my base case. So I'm glad to see it happen. Or would silver be kind of flirting with $50 an ounce? I'd be like, it's good for my portfolio if it does, but I wouldn't bet that it will. So I think, yeah,
Yeah.
precious metals surprised the upside, whereas Bitcoin's kind of muddling along, even though it has nominally touched new highs. By the end of next year, I mean, I think I would guess over 150,000 per coin. I mean, there are scenarios that go much higher than that because it tends to be a pretty explosive space when momentum builds. So I wouldn't try to predict a top. It's more like what I would consider healthy or realistic. Which is another 20% increase over the course of next year, if not more. Sure, that's pretty complicated, so it's hard to get into quickly. The short answer is I don't view it as a existential threat. What's interesting about this one is so back in the block size war, that was about the consensus. That was about changing the consensus of like what the node software recognizes as Bitcoin. So if you increase the block size, then older nodes, when they see those new bigger blocks, they will say, well, this doesn't meet the rules of our node, and therefore we're going to reject these blocks, and therefore you get an actual hard fork. And then, of course, there's other changes that are soft forks. What's interesting about this current debate is not even about a hard fork or a soft fork. It's basically about policies on top of consensus. And so both Knots and Bitcoin Core, generally speaking, when they see a given block of transactions, they both agree whether or not that block is valid Bitcoin transactions. Once they are mined and once they distribute to the network, they agree on the same chain of all prior transactions. Where they disagree is that Knots wants to tighten, generally speaking, filters on top of consensus. So they basically say if something makes it into the blockchain, we kind of have to accept it. Otherwise, we're a hard fork. But we can try to do these things to slow down certain types of transactions that we consider less valid. It could be things that are filled with JPEGs, for example, instead of monetary transactions. And they say, okay, if we can block these from getting to miners, we can maybe slow them down from getting into blocks. Even if they do get into blocks, then we have to accept. Whereas Bitcoin Core is saying that this has always been a part of Bitcoin, and if anything, certain allowances for those types of non-monetary data allow it to go into places in Bitcoin that is safer than other parts of Bitcoin, because it prevents things like UTXO bloat and stuff like that. Like if you have no spot to put in JPEGs, the easy way, there are still ways to put it in the hard way. So it still gets in there, and it actually causes kind of damage from going into those like less ideal places. So the Bitcoin Core theory is we'll make it easy to put it in these other areas so it does less harm elsewhere. Not that we endorse that going in, but that we want to give a better space for it if you're going to do it. But either way, the consensus is that these are valid transactions. Over the past couple of years, the core side has been winning in the sense that no amount of filtering has really blocked this from getting in. But it's an ongoing major debate around what the kind of the standard filter policy should be. Because it's open source code, ironically, anyone can tweak their own node to have their own relay policies for what sort of transactions they will relay to others. So the parts they can't really control unless they want to just fork to their own network is they can't really determine what meets consensus because then they're on a different network, but they all can determine what transactions they will broadcast to others. And so that's the ongoing debate right now. And I don't view it as existential, although it is interesting and it is important.
Bitcoin's evolution is entering a more strategic and institutional phase, defined by sovereign accumulation, policy debates, and macroeconomic shifts rather than short-lived speculative hype. Sovereign wealth funds are emerging as early movers, while central banks remain cautious but watchful. Its role as both a reserve asset and a decentralized settlement system is solidifying its place in the global financial architecture. The establishment of the Strategic Bitcoin Reserve by the United States in March 2025 has added new weight to its legitimacy, accelerating geopolitical interest and competitive accumulation. With institutional momentum building, Bitcoin appears poised to play an increasingly influential role in shaping future reserve strategies. Could Bitcoin's rise from a volatile asset to a strategic reserve holding mark the beginning of a new global monetary era? Stay tuned for more updates. If you value clear, data-driven insights into the financial markets. Make sure to like, share, and subscribe to catch our weekly breakdowns. Your support keeps us bringing you the sharpest market analysis. Enjoy the video.